We're joined by Bob Greifeld, former chairman and chief executive officer of the Nasdaq right here, and current chairman of Virtu Financial, and also the author of Market Mover, Lessons from a Decade of Change at Nasdaq. It's great to see you.
Yeah, I'm so happy to be here.
Thanks for being on.
My pleasure.
You know, this is an exciting time. First, talk about the book. Give us your, excitement about this book. Why this book? Why now?
Well, the book is really fascinating because when you think about 2003, we were living in the aftermath of the dot-com bubble bursting, right? We're also living in a time where floor-based trading was still dominant, right? So obviously we went through a lot through that period of time. Things were great. We hit the Great Recession in 2007, 2008. Then we had to kind of figure out a new way to succeed post that period of time, and obviously Nasdaq did well in that. So it really covers a fascinating time in, I think, the history.
And there's so much to discuss there because you mentioned the way we trade,
right,
and you mentioned the dot-com bubble. So I'll start with that because there have been some references, even made by you, that the concerns of path to profitability for some of these IPOs, right? Back then, you talked about eyeballs and how many people were using these things, but you had to have a path to profitability. Are you nervous that what you're seeing now, because there was a great supply of IPOs up to this point, are you nervous or comparing now to then?
No, I'm saying that the investors, the public investors, are revealing the fact that business models have to have a path to profitability, right? And to the extent they don't, right, then they have a trouble, right? So that, I think, is an eternal truth, right? At the end of the day, a company's going to be worth the sum total of its discounted cash flow. So we, I think, get drifted away from that a little bit, but clearly have the eye on that ball. And most businesses, the vast majority, think in those terms.
Right, and and you talk about all the things that go into making a new company, but I actually read something that said that you basically were making this comparison. Would you say that it's not like that at this point? Not bubbly, not frothy, not the era of what we saw in the dot-com bubble?
Well, I think you saw that WeWorks was not able to come public, right? Yeah. So that we didn't have a path to profitability. I think investors spoke on that, and that was somewhat a unique situation.
And governance issues.
Yeah, but definitely different. I would definitely caution when you talk about the IPO market how successful this year has been, and that we raised over $50 billion. Right? I refer back to 2003. We didn't really raise any money, right? That kind of thing. So you could have discrepancies with respect to the valuation. Should something be worth 9 or 10 times revenue? I don't know. Slack is trading at 30 times revenue. So that obviously people believe in their future. But they're going to have a clear and defined path to profitability.
All the things that come into play, we have a slowing economy, right? There's no doubt, we don't need to argue about that. What do you think comes next? Whether it's recession, whether you're worried about the consumer. How worried are you about what you're seeing in the markets, the economy, everything that's now developing?
Well, I'm most worried about us trying to talk ourselves into a recession right now. So when you see the consumer being strong, right, where wages are up and unemployment is down, it's hard to see a real recession happening, right? Mm-hmm. So I'm feeling quite comfortable. And understand the technical definition of a recession is just 2 quarters of negative GDP growth. It could be 1/10 of 1%. You could be in a technical recession. So that may or may not happen. It will certainly happen at some point in time. But as long as the consumer is strong, right, this economy will do well.
And that right now seems like the path.
They are, right? You have
I don't disagree.
3.5% unemployment.
I don't
you have
disagree.
Wages increasing by 3% year on year, right?
Yeah.
That makes people happy. That makes them spend, right? And that's 70% of the economy.
Talk about the importance of having a presence. You have a designated market maker. You have Virtu on the floor of the New York Stock Exchange. Now, I've been on the stock exchange. You've been there yourself.
Yes.
We know
You've been
this
there
well,
a long time,
right? So, I mean, there were 40 specialists. Now there's, what, 4 or 5 designated market makers? Why there? Why now? What's the importance and relevance, or the lack thereof?
Well, I would say when you look at Virtu, it's a global, diversified business today with a very strong customer franchise on both the institutional side and also the retail side. On the retail side, TD Ameritrade is a great relationship that Virtu has. So the specialist part of the operation is quite small, and it's just leveraging the technology we use as we trade on a global basis.
What about some of the other things? I would love to just get a quick thought. China, deal, no deal, partial deal?
There will be a deal.
crypto, and we have Facebook Libra, we have Zuckerberg going at the end of the month to go testify once again.
I'm a believer
crypto?
in crypto, but not as a speculative instrument. I believe in crypto as a means of conducting value, not as a way to bet on the direction of the price.
What about growth versus value? FANG stocks, for example, which were running hot. What are your thoughts on that?
Well, I always would pay attention to the PEG ratio, right? So what are you paying for earnings relative to growth? Right. You look at that, I think it keeps your your mind focused in the right direction. Clearly, you should pay more for growth, and you should have a thought of how much more you should pay, and it shouldn't be infinite, right?
We had some projections for corporate profits. I know you follow price to earnings relative to growth, and you look at corporate profits, you look at GDP. What are your projections for corporate profits and GDP? What would you like to see, and how close are we to your projections?
Well, I believe that it's hard to outrun 2% over the medium to long term, and I think 2% is a good number. We had tax events happen last year. We were in higher than that, but right. I think 2% is a good target for us.
Fed cutting again, the end of the month, probably?
Yes, I think they basically announced that yesterday. They announced that by not saying anything to the contrary, right? So they know that was the assumption, so that's happening. I think the question of the repo market, I don't study that, but clearly that could have been planned a little bit better. And, the amount of support that they provide today is somewhat surprising.
Would you say that we've had a great supply in the IPO market? I mean, we've had so many wonderful companies, great ideas. I mean, I love it, and this is what keeps the market alive. Is it done for 2019? Maybe we got to wait for the new money of 2020?
I don't really know, but I would say this. If you have a strong company with a strong franchise, profitable, growing, path to profitability growing, that window is always open.
What's your investment advice, particularly in light of the fact that we have a 2020 election, right? And this has been a very business-friendly administration, right? People love it. They have CEOs on all the time. They love it. But now you have a different ballgame, right? So you might see changes. Healthcare, just for one. I mean, what's the investment mantra now?
I think you're years ahead of yourself, right? Because one, the election's not for 13 months. New administration doesn't come in. To get anything through Congress, it's at least a year for that to happen. So we're talking about 2 years, 3 years, right? So let's say the election goes a certain way and things want to change. It's not going to change for 2 to 3 years.
All right, so you make a good point, because it would take time to actually go in, and then you would need the Senate to actually agree.
Yeah, exactly.
If you had a change, and that's less likely.
Congress is very good at doing nothing.
What are you most excited about?
Well, in terms of the weather here, I'd like the rain to stop so I don't get rained on so much. But I'm excited about the fact we do have a pro-business climate. You have the spirit of entrepreneurship is alive in this country. I spent a good amount of time in California, other tech centers, Austin, and it's amazing where young people want to change the world for the better in many different ways. So it's hard when you travel the country not to be optimistic about our future.
The way we've seen trading change, right? We used to talk about the papers on the floor. It was all by hand. Right. Then you have computers, but the humans are still a part of it. I mean, you have these overlays, and you still have the humans that are controlling the computers, right? And that watch this volatility. The volatility is good, right?
Well, within levels. So you and I remember being on the floor with the paper, and it really was quite the mess. And you say, how can this be the center of global capitalism? And the book starts kind of in that era, and we see the electronics take over. But your point is spot on, which I never hear talked about, right? People are writing the code. People control the code. Right? The machines are not in control. The people are in control of the machines. So the trading that happens today is still dictated by people. So we feel good about that. Volatility, I think, you can have too much of a good thing, but you have too little of a good thing. So a reasonable level of volatility is certainly good for the market. I think we've been in historically depressed volatility levels. I think over the next 2 years, you're going to see more volatility come into the marketplace.
And just to circle back to the IPOs, last thought, I mean, Endeavor pulled out, right? Not the right time. Postmates delayed. We have Airbnb. We're waiting for Palantir. Just to name a few, WeWork, we don't really know what's happening. Any thoughts on any of those particular companies?
Well, the general thought is, again, if you are a growing company, right, you can't imagine. So let's talk about what we got a economy growing at 2%. Things go well, right? I come forward with a company that's going to grow at 20%. right? The market will pay a premium for that 20% growth. Now, I might have to have 20% growth with profitability or a path to it, right? So if I'm in that realm, right, I come to market, I don't care what's going on in the general economy. If I have demonstrable proof that I'm a 20% a year grower in a 2% economy, I'm going to do well.
All right. And the consumer's alive, no recession, is that right?
That is what I am saying.
I like it. We'll stick with that. Bob Greifeld, it's really nice to have you on our show here on the TD Ameritrade Network. Former Chief Executive Officer and Chairman of the Nasdaq and Chairman of Virtu Financial. Thanks for joining us on the show, and we'll continue to follow the book as well.